Welcome and good morning to the IX Trading Room with me, Richard Perry, Market Analyst for INFINOX, and welcome to 2023. We've obviously got a big year ahead of us, and markets had a pretty tumultuous year last year with a massive sell-off in risk assets and a lot of turmoil that was seen through markets. But what we've got is obviously a new year, and whether we come with a new attitude to risk appetite remains to be seen. At the moment, it is obviously uncertain whether that is the case. But what we're going to talk about today is I'm going to look at the platform. It's not the platform, is it? That's the calendar. Let me just show you the platform. Here's the platform, which is the MT4, MT5 platform. I'm going to take you through a bit of analysis, drawing in a bit of fundamentals, looking at some charts, looking at some markets, bit of opinion as to where I think markets are at the moment, setting up into the new year. Look at some Forex, look at some commodities and a few equity markets as well. So the key question, I suppose, that we need to consider is whether the continuation of the dollar strength will run into 2023. Now, what we saw, if I get my chart of the dollar index, what we saw in late 2022 was this correction on the dollar. Let me just go back a little bit. And you can see that was quite. Oh, actually, let's go there. Right, you can see quite a big correction within essentially what was a massive bull run. It sort of accelerated away, broken the uptrend, and the question is this the end of the dollar bull run? It's not on a technical basis yet. That the sort of underlying trend is still there, still intact. It's around 102, 103 at the moment on dollar index, but you're certainly going to be asking questions considering the severity of the decline in the dollar that we saw. So this big resistance area overhead here, which I think is going to be an important factor here, 104.50 up towards 105, let's say 106 really. 104.50 to 106 is the resistance, and that is going to be, I think, the telling resistance early in 2023 as to how markets view the dollar. Now, I think that we've had dollar positions that have rallied, positions against the dollar, I should say, such as euro dollar. We saw a strong recovery in euro dollar October into the new year. We saw dollar yen. Look at that sharp move lower on dollar yen, which is the dollar correction as well. And that sort of leads you to two interesting questions, really. I've been obviously in the run up to the new year, I've been sort of doing the background reading, and the feeling is that the euro dollar positioning is quite overbought, considering the run higher that we've had in euro dollar in the last few months. You can see here correcting or unwinding some of that sell-off, and the positioning on euro seems to be a bit overbought. And you look at these sort of central banks and how they're looking at monetary policy. It seems that the Fed is still going to be tightening monetary policy a couple of more times potentially. How aggressive is the eurozone going to be? Well, eurozone inflation today is going to be, I think, so eurozone inflation is going to be an important question here. And what we have on the economic calendar, you can see, not today, actually tomorrow, sorry, is that we have eurozone inflation coming out. And sorry, it's actually on Friday. Scrolling all the way down here. Eurozone inflation on Friday, sorry. And that's going to be a key consideration. German inflation fell sharper than expected yesterday. And how does that impact on eurozone inflation? Does that mean that eurozone inflation comes in much lower than expected? How does that impact the ECB monetary policy decisions going forward is the question. And I think that is going to be something that will be affecting markets coming towards the end of this week, is how Eurozone inflation comes out. That has already, the German inflation has already weighed on euro dollar here yesterday. Now you can see on the technicals here, euro dollar still remains in this uptrend. Now it's interesting because we've got these uptrends on euro dollar, and they are still in play. Euro has broken this mini uptrend that it had through December, broken that yesterday, but it's still holding on to what is essentially a 2-month uptrend. And you could argue an uptrend channel, I suppose, but essentially it's in a 2-month uptrend. Now, if euro dollar now breaks this band of support, which if I get the crosshair, euro dollar band of support comes in at 104.50, 104.45, 104.50. If it goes below 104.50, that is, in my opinion, that would be a real moment for euro dollar. That would be a suggestion that euro dollar is decisively coming lower. Look at this RSI here. It's still above 50. Yeah, it's gone down. It's broken with the uptrend breach, mini uptrend breach. It has sort of moved to a less positive positioning, but it's rebounded this morning. And euro dollar is holding on to that uptrend at the moment. And I suggest that is the case at the moment because, again, just around things that I've been reading, is that one of the key factors in the coming months is how Japan defends its currency. Japan was looking to, at the end of 2023, it was Japan has a significant holding in US treasuries, and what it was doing, it was defending the Japanese yen, because weakening Japanese yen was significantly adding currency pressures and pressures on the current account deficit. And subsequently, what we were seeing was that Bank of Japan, or the Japanese government, was selling its holdings in treasuries and subsequently using that to buy to protect the Japanese yen and buying yen back. Now, what we've seen is how the question is, how significant does that happen in Japan over the coming months? If that does happen significantly, we could see, first of all, buying of dollars, and that would help to boost the dollar. And do other countries do that as well? Do other countries sell their treasury holdings and then therefore buy dollars back to do that? And that could support the dollar in the coming months. Now, that is a question that we don't know yet, how significant that move is, but is something that we need to look out for in the coming months. So at the moment, we're holding on to these uptrends, euro dollar holding on to the uptrend. The other question for euro dollar in the coming months is, how significantly does the ECB tighten interest rates? Now, the suggestion is probably another 100 basis points. You've got 2 meetings before the next ECB staff forecasts in March. So we've got that would be the question. 2 meetings of hikes, and then do they then start to go on pause, would be the question. Watching inflation in the Eurozone is going to be crucial to answering that question. So for now, we're holding on to the uptrend in euro dollar, but is it a stale uptrend? Well, for now, as I said, it is holding, but 104.50 is a level that I'm going to be watching significantly in the coming weeks for that as an indication, that little breakout level there. But if that does move to the downside, then we could see quite a deeper retracement back towards this further purple area, which was the old breakout level 101 to 102 area. So we need to be watching out for these things here. But as I said, for now, euro dollar is holding on. The big one for 2023 could be the yen, Japanese yen strengthening. As I said, as the Bank of Japan sort of moves towards a a more, first of all, Bank of Japan moves towards a more hawkish monetary policy, and secondly, as the Japanese government looks to also potentially sell treasuries as well. So that would be two factors there that could continue to strengthen the yen. So right, anyone on the INFINOX Zoom call can ask questions via the chat box, by the way. Sorry, just to let you know that. So what we do see at the moment is the strengthening of the yen. We see this decisive downtrend on dollar yen. Now that is a trend that I think is going to continue. Old support becomes new resistance. This is key throughout this trend. If I get the crosshair, we can see that old support here became new resistance on the way on the first move lower back in November. We've then subsequently seen old support becoming new resistance twice more. On here, on the breakdown below 137, 138, became resistance on the rebound. And again, subsequently to that, at 133.50 to 134.50 breakdown. And all the while, we've been building this downtrend. We've been looking at the 21-day moving average is a good indication here. 21-day moving average is something to watch out for on dollar yen. And what we've seen yesterday, although it didn't hold, was a breakdown below the next line of support, 130. It was 130.60. That support was broken yesterday, rebounded intraday. But looking at the configuration of momentum, every time we get back towards that sort of 40, 45 area on RSI, it's a selling opportunity there. So we've got that on dollar yen. We've got that new downtrend building. And when dollar yen trends, it really does go. We can see that here historically. When dollar yen really does trend, it doesn't often, it can go for weeks. So that is the position we're looking at. This one here was the classic one from August all the way to sort of mid-late October. This was the classic one here that we saw, dollar yen trending higher. So we've now got a retracement trend coming in on dollar yen, and the fact that we're now starting to put pressure below the 130 mark. 130 was broken yesterday. Again, that could open the next leg lower on dollar yen. Now the question is, how far does the yen go? Well, in 2023, as the Bank of Japan looks to be more hawkish than markets had sort of been factoring in, there's been a big shift in outlook for the yen. And from my sort of reading of the situation is that the yen could be the currency of the stronger currency of 2023, certainly in the first few months, as markets continue to reprice for the more hawkish Bank of Japan. And subsequently, we could see dollar yen moving lower. We could also see currencies, let me see, euro yen. We can also see euro yen, I think, moving lower. And we can see, I haven't updated the levels on euro yen, but this is another one. Certainly coming back towards the sort of 134, 135 area, you could see euro yen, maybe even the 132s, 133s. So that's likely to be the case. And again, what we can see here is these lower highs on euro yen starting to form, lower highs. So near-term strength gets sold into. So you've got a big resistance around 140, 140.70, 140.80 up towards 142 area, 142.50. Big resistance there now starting to form on euro yen. So again, another currency pair that looks likely that it will be starting to turn in the yen's favor. And that is certainly one thing that I'm going to be looking out for in the first few months of 2023 will be how strong the yen positions move. And as I said, euro yen falling is yen strengthening. So back on dollar, euro dollar, as I said, initial support comes in 105.20, but the 104.50 area, 104.45 is the key area of support I'm looking out for there. Another one, interestingly, is the underperformance at the moment, I should say, underperformance of sterling. And I can show you that here. Let me just get my performance. This is FX in the last month. You can see it's a bit choppy moves, but overriding, you can see the performance of the yen at the top. Aussie's made a bit of a comeback, isn't it? And euro still holding up, but at the bottom here, what's this? This is sterling. That is the underperformance of sterling is quite significant, actually, especially against the yen. And what does that mean? Well, that means sterling yen is certainly something to be looking at. Sterling yen to the downside here, we can see this big falling away of sterling yen in the last few weeks, and seemingly capacity to go even lower. A little bit oversold on a near-term basis, but if you get the crosshair, you can see here there's fairly significant resistance that comes in around 160, big figure up towards 162.50 area. Big resistance there. If you got a rebound towards that, well, you'd be thinking that definitely is a, looking at the momentum indicators here, anything around that sort of 45 area on RSI up towards 50 would be an area to start thinking about for shorting opportunities, I think. But certainly sterling yen looks to be a currency pair that is on the way lower. As I said, a little bit oversold near term. Initial resistance comes in around 158, 158.50, 159. That's the initial resistance. But yeah, I think sterling yen looks like it's one that could be going lower. I was going to look at. Oh no, I've changed it. Okay, let's change it different way. Back there. Right. So on sterling dollar, you can see here the resistance, repeatedly resistance now having broken below 121 figure, that area has become resistance over the Christmas or late Christmas period. Seen 121 figure as a resistance, and zoom in one more time, you can see that significantly there. 121 figure area, time and time again, is resistance. So we've got that there. So again, selling into strength, I think, on sterling dollar, anything around 121 figure, that it would turn more positive above 122.50. I think, but here you can see, looking at this chart, you've got this 21-day moving average, which is now rolling over. It was a basis of resistance. Became then a basis of support. Now starting to roll over. That is 121.35 area. But essentially anything above 122.40, 122.50 is sort of starts to turn more positive again. But it certainly looks at the moment as though this is breaking the uptrend. You've got momentum turning more corrective on the RSI. Everything sort of points towards at least a negative drift. It doesn't look as though that there's sort of any sustained buying pressure at the moment. So that's currencies at the moment. But what we do have is this strong move higher in gold. Now this is a trend that's accelerating. You can see here it's accelerated through resistance. It's now achieved its recovery target from the base pattern, which was 1844. and it's on course towards a test of the next resistance area, 1875, 1880. So it certainly looks as though this move is going at the moment. There is there's seemingly a bit of a safe haven bias that certainly is helping gold higher at the moment in the move that's accelerating. It looks like gold could be a bit of a comeback kid this year. It had obviously a bit of a torrid time through 2023, as a lot of things did. I mean, essentially, let me just show you. The chart I've got here. This is sort of a cross asset chart since 24th of Feb, which was when Russia invaded Ukraine. Initially, dollar strength was the dominant factor, and since October, dollars started to sort of fall away. But interestingly, you can see that gold has turned around. Gold and the dollar are very negatively correlated. When where the dollar goes down, gold would be going higher. That relationship remains very true at the moment, and you can see here, gold is tracking higher. Here at the bottom, Bitcoin. Wow, Bitcoin is still not really doing a great deal, still basically flat, but certainly gold is picking up in the last sort of couple of months, really. But it's accelerating higher at the moment and is looking pretty strong. And again today, picking up decisively higher this morning. I'd be looking at this and saying, well, this is the breakout support. You've got the uptrend here. It has tended to come back to the uptrend. It's sort of coming towards that 70 mark, which on the RSI tends to be the point at which it starts to sort of falter a little bit. So just I'm bearing that in mind with the acceleration higher. But just for now, it's looking pretty strong, isn't it, gold? And yeah, certainly suggests, considering it's broken out decisively on a closing basis, and again this morning, any sort of near-term corrections that help to unwind that RSI, a chance to buy anything back towards that uptrend. You've also got this 21-day moving average, again, the basis of support, which is along that uptrend. So it's gone a little bit away from these two indicators here. So perhaps some little bit of a near-term correction. Let's look on the 4-hour chart. Yeah, I mean, 4-hour chart is accelerated away again. So just whether you chase that higher with that 4-hour RSI up where it is, which is, yeah, if you get the crosshair, it is pretty stretched. It's more stretched than at any time since well, over more than September. So it's certainly coming towards a point at which it's likely to consolidate and maybe even pull back again. So that is something to bear in mind. But certainly it looks strong at the moment on gold. Now, silver is not as strong as gold at the moment, which is interesting. Although it has picked up today, it hasn't decisively broken out. It is running higher along the uptrend, but it's edging higher. Maybe there is more. Maybe there's more in the silver trend higher at the moment. So again, something that on an immediate term basis, maybe silver has more upside potential. But I do like gold at the moment, I have to say. But you can see here the strength of this uptrend. It's all looking pretty decent here. Just a little bit, I don't know, I'm sort of looking at the negative divergence here and wondering about it. It's not it's not a negative divergence that I'm too worried about at the moment. It's just something just to keep in mind if that trend line breaks, I think, and if the RSI does go below where it's sort of been holding, sort of in the 55 area. If it goes below that, you'd start to get a little bit concerned. I think at the moment it's still pretty strong, and picking up this morning is good as well. So silver is still looking strong. I do prefer gold, though, I have to say. Looking at the oil price, there's been a sharp retracement yesterday, and actually, if you look at yesterday's candle on oil, that is a bearish engulfing candle that has broken the uptrend and it's also sort of coming back lower on the RSI. So that's a little bit of considering how oil previously looked as though it was building a pretty nice recovery trend. I think the way that I would look at this move here on oil is if it goes back underneath this support that was coming in at 81.40, if it breaks and closes below that, I think that would be considered to be a bit of a not only a trend break, but also a break of a higher reaction low, which was that reaction low from a few days ago. That would be ending this recovery trend. It doesn't necessarily mean it turns negative again, although considering the RSI is back under 50, it does sort of look less positive. But it sort of breaks this recovery, and what we could see is oil sort of oscillating around, I think, in the early weeks of 2023. So that would probably go alongside that that outlook of oil just sort of chopping around. There's a lot of sort of fluctuating factors for the oil price at the moment on a fundamental basis, and the technical sort of bearing in mind it's had that move higher and then it's now broken the uptrend, sort of reflects that. So just some uncertain signals on oil at the moment. Let's look at equity markets quickly. What we've seen is that US futures, well, put it this way, first of all, US Wall Street does not perform as well as European markets, and we can see that on this chart here, in that here are the European markets, DAX and CAC, and to a lesser extent FTSE. But this is the interesting bit here. Dow futures are performing basically in line with the European markets. So if you're looking at Dow, that's the place to be positive. S&P 500, much less so. And the reason the S&P 500 is being, performance of S&P 500 is being dragged is that it's the tech stocks. Tech stocks are still very much in the doldrums, and very much sort of negative, and a drag on S&P 500 futures performance. So it doesn't seem as though, even though treasury yields have sort of moved lower, NASDAQ and the tech stocks have not performed in any way at all. And that is the real reason why S&P futures have failed to really recover at all. You can see this sort of being still underneath the resistance that comes in 39.12 up to 39.45. That is the big sort of effectively a pivot line in what could be essentially a trading range, but that is certainly a pivot line of resistance, 39.12 upwards towards 39.45. Failure to break above that really does keep the sort of outlook pretty neutral to negative, and you can see that here on the RSI, failing underneath 50, although not going underneath 40 really on the RSI. You're sort of keeping a bit of a slight neutral bias within, sorry, a slight negative bias within what is probably a neutral outlook here on S&P futures. But if you look at the DAX here, seeing DAX picking up back above its equivalent pivot area. So the DAX has really sort of managed to pick up quite strongly, and essentially what we've seen is the DAX improving. You can see that through the RSI back above 50, so that's a positive again, and it's looking fairly encouraging on the DAX with that, and you can also see that on FTSE 100 as well. When you look at FTSE 100, considering it's basically FTSE 100 was flat on the year pretty much in 2023, sorry, in 2022. Bearing in mind how much US markets have fallen, you've got the FTSE 100, which is sort of pushing up towards a test of the 76 towards 77 area, which is the massive resistance that's been in place throughout 2022. And if it can get back above the resistance, then yeah, it sort of really does go up and away, and maybe FTSE 100 is a place to be, but just at the moment it has picked up quite nicely. It's moved above near-term resistance 75.50 area, 75.60, moved above that and is holding the break. So the RSI is positively configured, so maybe moving towards a test of that resistance. So that's the key. But obviously what we see if you come back towards here, start the crosshair here, which is basically a month, 2 months ago, it's in a 2-month trading range. So how it resolves that trading range will be the key. And obviously the resistance of that range, 76.35. And the support of the range comes in at basically 73.05. So a positive bias within that trading range, again, neutral on a sort of a 2-month basis, but with a positive bias within that. And what we've seen is a pickup in the last few sessions that's looking pretty positive. Okay, so that's all the time that I've got for today. Thank you very much for coming. What I would say is I wish you good luck for your trading in 2023. I'll be back next Wednesday for more of our outlook and seeing how markets are developing. The first week of 2023 is often seen as a bit of a barometer for how markets are sort of positioning for certainly for the coming months, and how traders have come out over the Christmas holidays, had the break, they've come back to their desk, they're starting to take new positions. And it's often seen as a bit of a barometer for markets. So it will be an important period in the coming week as to how markets do get or how traders do position themselves. So next Wednesday we'll have more of an insight into that. So do come back. Anyone on YouTube, if you're clicking on the bell, you get subscription to our service and you get notifications. So yeah, it'd be good to see you. But thank you for coming today, and I wish you all good luck in your trading, and I'll speak to you again next time. Thank you.